The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets chopping around in both directions. You have the S&Ps lower in the overnight, down to a low of about 39.12. You accelerate to the 39.30 area since then, chopping around. You're barely in the positive by about 7 points this morning. NASDAQ 100, you're positive by 66, trading at 11,422. That's up about 0.6%. You have the Dow in the red right now, 33,120. Pretty remarkable when you back things up. We were flirting with maybe 35,000. We were right there, man. And just like that, we're 33,000. We'll call it 34.5 to be fair. 1,500 points almost where we lost this week alone in the Dow Jones Industrial Average. The Russell this morning up by 1, quite the fall off from where we were on Wednesday at 1916. Crude holding up pretty well, above above $80 this morning, just under 81, 80.96. You got the gold contract up to 1939 overnight. We're back to 1925. It's interesting. I didn't always break down all the currencies when I would do the top of the show market update in terms of just breaking down the market action, jumping around to the indices, commodities, stocks, things that are moving this morning. But you got to cover notes and bonds, and you got to cover currencies in this market with how important they are to everything. And what do we got? You talk about a little bit of a reversal in terms of what we had happen. And you were down a full point, folks, from where you were basically, we'll call it 33 hours ago. 34 hours ago. Something like that? Yeah, something like that. Basically coming into early Thursday, you were at 116.06. We're at 115.06 right now, and that's putting the 10-year back above 3.45%. Yesterday on the show even, I think we had a 3.397 handle on the 10-year. So yields rising. Yet again, we got lower price, higher yield. You jump over to the dollar index. Dollar index right now, as you'd expect, spiking in correlation. We're at about 102.50 right now in the dollar index. We jump over to the euro US dollar right now, 108. You back off a bit. We got to jump over to the yen, US dollar yen right now. There's a run for you, man. Almost pushing back to near those highs that we got in the spike on Wednesday. We're above 130.50 right now. You put this thing on a longer term time frame, you can see, yeah, that's quite a spike. But we've seen these spikes in the yen. And boy, if you line it up, right, let's just take it from this point. Just draw a simple trend line, channel line. All right, what are we doing? We're bumping right up to that area on the upside of the trend in the dollar yen. Lower lows, lower highs. Right now, though, you got the yen with higher price, up $2.11 at 130.53. We jump over to the VIX on a negative market week. We'll see if we can have some positive action today. But all things considered, we're sitting relatively low, especially when you compare it to the last year. I was talking about with friends saying, what's the theme going to be this year, right? Last year, the theme was, man, you get down near 20, that VIX is at lows, and we are going to see a spike inevitably. This year, with Fed not as focused, maybe the VIX at 20 isn't appropriate when you think historically the average is about 16 and a half, something like that. So we are still well above the historical average for the volatility index, but boy, we got a lot of volatility coming down the line. That is for sure. All right, let's jump around to what we got pulled up this morning. And we'll kick things off with, Google. So Google, they're going to cut 12,000 jobs, 6%. Nothing to miss there. Nothing not to miss, I should say, as in quite a number. This is not a number where Amazon's cutting 10,000 of their million workers, right? That's 1%. And I think they're even above a million at this point. Microsoft's cutting 6%. And if Amazon cut that, I think Amazon's up to like 1.3 million workers. If they cut 6% of their workforce, they'd be cutting 80,000 jobs, to put that in context. So Google cutting 6% of their workforce on a global level. Severance packages they're going to push out, vacation, bonus pay, and healthcare. So they're trying to do right by those employees that they're letting go. The CEO said he took full responsibility for the decisions that led us here. Listen, things have changed, man. Over a year and a half, these companies were ratcheting up for growth And now we've seen an area where we have a Federal Reserve that has just hiked 4 75 basis point hikes, followed by a 50 basis point hike. And the only discussion now is whether they're going 50 or 50 or 25. And there's a lot of reasonable arguments on both sides of it, man. And we're going to find out where we go, folks. And we're going to find out where we go in a week and a half. So we come back on Monday. It's January 23rd. And we are 8 days away from the beginning of that Fed meeting, and I believe it's Wednesday, February 1st, is the actual announcement, 2 p.m. press conference to follow at 2:30. I think the market's pricing in about 25. I think you'd see quite a shock if they went to 50, and I think 50 is in play. I do. The more you look at how things are and where we are on this inflation spectrum, but we get to find out. It's anybody's guess. But Google, nonetheless, they are trading, I think, higher, right, in the pre-market on this news. Yeah, there you go. So they're catching a little bit of a lift as they are trimming some costs, man. Google spikes from 94 up to 97.46. You were as low as 91 yesterday. So you talk a spike. But boy, this thing, talk about some doldrums. There are 618s everywhere in this market, folks. Everywhere in this market, 618s. Where is Google now pulled back to? From the COVID lows of March to the 618. I mean, it makes sense. They're at the 618. You take a look at the NASDAQ 100, folks. Where did it get to? Basically touched that 618 area back in October from the COVID lows of 66.28 up to 16.76. That's the reason why I talk about it, man. Excuse me. If you haven't put it on your radar, folks, doesn't mean it's likely to happen, but you better be aware of the possibility, okay? S&Ps have already come down to 50%. If you don't think the S&Ps can do what great companies like Google or something have done, 618 brings us down to about 3,200 on the S&Ps. Right now, we're trading at 39.25. Now, going a little bit shorter term, even on the S&Ps, okay? I'm going to take off that large. Sorry, I got to back up a little bit further. And what am I looking for? Yeah, I think it was the 20-day hourly. No, I'm going a little bit longer term. Yeah, was it this acceleration? Let me take off this longer term one. I'm telling you, I was looking at charts last night, folks. That's it. And there are 618s everywhere in this market. Yeah, basically, I think that's what I was looking at. Even that no, that's not what I was looking at. So there's the 618 of the larger move. I'll get my thoughts together. But I was looking at it last night. I think it's going a little bit longer term. No, it was a 4-hour. And it was this move right here. Okay, perfect. So from the highs we had back on December 13th, where we got that big spike higher, and then you rolled over quickly by the afternoon. I think that was the CPI number for October, potentially. Let me take a look at this, folks. There's 618s everywhere. I got so many 618s, I'm losing track of which 618 I want to show you. Okay? So what did we do in this market? From December 13th, you trade from a price point of 41.50 down to about 3,800. Okay, took a little linear regression along the bottom here. Where did we just trade up to before you accelerated lower? Boom, the 618. They're everywhere in this market, man. And if this is an A to B, C to D, you're talking about an A to B leg that's 350 points. Well, if you just take that off of where you are in 4,000, that alone gets you to 3650, folks. And that is just doing an A to B, C to D with your A to B leg taking place from December 13th to December 20th. 1 week is how long it took for 350 S&P points. Stay tuned, folks. Lots to talk about. We got Netflix earnings. Netflix trading higher. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps up by about 10 points right now. You got the NASDAQ 100 in the green. You got the Dow making it into the green after it was in the red when we began the program. We jump over to Netflix. Strong numbers from Netflix, man. They add 7-point-something million subscribers. Let's see what the number is here. Exactly. 7.66 million. 7.66 million subscribers. The market was looking for 4.5. Decent beat, especially when you think about that they were losing subscribers a while back, right? That's where the cascade really began, losing subscribers, opening up the ad-supported avenue to revenue, etc. The other news out there is that their founder and CEO, Reed Hastings, he's going to be stepping down as co-CEO. So he was CEO, I guess. You have Ted Sarandos, who was already co-CEO, and he's the company's public-facing Hollywood. And you have now Greg Peters is going to be co-CEO. Previously Chief Operating Officer, Peters, overseeing his product development and push into advertising. So you got the Hollywood guy, Sarandos, and then you got the operational guy who's overseeing product development and the push into advertising with Peters. Now, the market loves the news, man. It's popping even this morning. You're up from 335 to 337. And as I was talking about coming into this number, you know, you're now more than 100%. You were 100% off the lows coming into that number prior to their earnings, and you were up substantially, 30 to 50%, depending on where you get into the stock, just from where it was trading in October. You're going to open today at about 338. Recent highs just last week, though, 336. So we're going to be pushing right at those highs recently. Interesting, you sell lower into those numbers, maybe dealing with a little expectations. But boy, they beat them in a big way. 7.7 million subscribers added. And yeah, that'll be a Harvard Business case study. I'm sure there's already many. It just shows, folks, you got to innovate. You got to change. You can't just stay. How is the gap open for direct-to-consumer movies? I mean, any studio could have started an offshoot of Netflix online and had done the same thing that they did, right? You just start a startup. Maybe you started up, maybe NBC, maybe any studio, right? Starts it up. They include their programming to start, and then they make the contracts with everyone else. There was a void there, man. What about Blockbuster? Well, why wasn't Blockbuster sending out videos to you instead of making you come in store? I mean, just an amazing thing how he transformed everything, and still that's happening. So he's going to be chairman now as he looks at things from a little bit big picture. for Reed Hastings, and interesting to see where we go from here as you get Netflix shares. They're going to pop a solid $20 now. Excuse me. The expected move was $21, folks. Where are we right now? 22, 23. Pretty cool, right? Now that's in either direction, but it is right now literally at the expected move for that. Yeah. Yeah, and Blockbuster, I mean, folks, if you haven't gotten the Den, please come in the Den. It is an absolutely, I get in here early in the morning. I'm reading messages from people last night that are up even earlier than I am in the morning, talking about charts, talking about markets. I'll pull up some. There was some great information about KB Homes, I think from our man Frank last night, talking about cancellations. I'll pull that one out later, but boy, cancellations, not surprising, spiking. As the price of the house you probably put a down payment on, substantially less potentially than when you did. Yeah, and nobody had anything, in terms of what you had, saying Blockbuster didn't have the broadband set up. Nobody had the broadband set up, man. Netflix didn't have the broadband set up either. Do you remember the days? I remember the days. I wasn't even in the market when Netflix started announcing the plans they had. The numbers were staggering. Do you remember the years when they were like, yeah, we're just going to spend like $20 billion on content. We're just going to do it, The market was like, you're going to do what? You're going to spend $20 billion on content and somehow just like take all the viewers and the eyes? And they basically did it. So pretty remarkable. So that's Netflix. They're going to open higher at about 338. You jump over to Disney shares. Now, interesting, right? Disney gets a little bit of a pop, but nothing too dramatic, as this just might be a Netflix story here. Disney up at $100. You are up 1% right now. Basically closed at 99 yesterday. This thing off the lows of 84. Yeah, it'd be interesting to see where they go. I mean, Netflix really got punished in dramatic fashion. And you talk about a company now, just to get back to that fundamental, you're talking about a company valued at about $150 billion market cap. You jump over to Disney shares. Disney's looking at a valuation right now about 182. Interesting how those two go back and forth. Remember when Netflix at the highs was well above Disney? Disney now with about a $30 billion gap above those Netflix shares. All right, yeah, let me find that graphic from KB Homes. It was about 6 a.m. this morning, I think. No, was it last night? Might have been last night. Give me 1 second, folks. I'm going to pull it up because it was awesome. Yeah, here it is. Okay. Yeah, so thanks to our man Frank for posting this at 8 o'clock last night, folks. All right, great information in the Den all the time. And check it out. KB Homes, large home builder, just reported a 68% cancellation rate, meaning over 2/3 of the home buyers walked away from their contracts in the quarter, leaving with a massive pileup in inventory. Last year, cancel rate 13%, 14% the year before that, 22% in 2019. This is Q4. All right, I wonder how Q1 in 2020 was playing out. Nonetheless, you see the spike there for KB Homes, man. Can't deny those numbers. And yeah, there's, of course, when people are putting down payments, and meanwhile, you're going to buy a house and you're going to lose basically more than your down payment by buying that house because the property has dropped that much since you put that down payment. But man, you look at some of these home builders, and I believe there was home builder sentiment yesterday was rising for the first time in a while. I mean, maybe we're getting forward looking here, and maybe that was your double low at $25 for KB Homes, down about 50% from where we were at the beginning of last year, down to 25. We're up to about 35. Pretty interesting, almost right back to where we were prior to the pandemic coming into those prices. All right, let's check out some of the FANG stocks as we got about 5 minutes to go until the opening bell. Back to a short-term time frame. We got Apple shares basically up about 50 cents right now at 135.71. Let's see how Tesla's doing, because we might get a little Tesla testifying with our man Elon Musk, as he may take the stand today, potentially. I was reading. You got Tesla up another $2. Quite a run off the lows of 101. What I have said, folks, even the 382, just the most recent run lower, back to December 1st, brings you to 142, maybe the 140 range. If you take the, let's just bring an extreme case. We're going to activate that. We're going to bring it all the way down to that basically spike low, 382. We almost got there. That's interesting, right? 138.31. Where'd we get to? 136.68, within about $1.50 of Tesla. And yeah, he may be testifying today, having to do with his trial, saying taking Tesla private at $420, funding secured. I mean, you have to roll your eyes, man, at that one. All right, what else we got going on? Let's see how notes and bonds and the dollar's trading right now as the slide continues a bit. Be interesting to see what happens when we get back to this channel line if we do, folks. This is the 10-year. Right now, we're negative by basically half a point, even more than that. You're off almost 18 ticks right now in the 10-year. Yeah, we're off a full point and 5 ticks from where we were yesterday. We probably got the 10-year yield sitting right near 3.47% right now, the yield on the 10-year. Yeah, it'll be interesting to see where we go, man. It's going to be an interesting Fed meeting. It would be a surprise if they go to 50, but I think that's where all the risk is right now. If they go to 25, the market's going to love that for sure. But I feel like you got to factor in, folks, the run we've just had from where we were November 8th to where we are now, from even where we were in December 30th, the data that we've gotten in. Don't forget that we've traded positive higher by 3 full points in that 10-year, from 112 basically to above 115, even with the pullback. Stay tuned, folks. We'll finish this conversation up. We'll come back for the opening bell. Don't go away. We'll be right back in 3 minutes.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. Excuse me. You got the S&Ps up 11 points right now. We got the dollar index up 38 ticks, 102.440, just chopping around in that 102 area where you've been just about the last week. In that dollar index, you got all the markets in the green right now. We jump over to Netflix shares, see how they open following their good numbers. Yeah, you're up about $20. Interesting, right? The move, about $22, $23 for Netflix shares as of the close yesterday, up 6.3%. And you were above the recent high, yeah, but just like that, you're actually below that high. 336.65. Be interesting to see how Netflix trades today. Following some good numbers, you open higher, but initially, back to a 5-minute chart, a little bit of a sell-off, man. You just traded from, what, 339? You're down $5 from where you were trading at just at 920. Now, very thin markets pre-market, which is why we'll see where we go on the open, of course. Okay, we talked about yields. Let's talk a little bit about Mr. Summers. So the reason why I love talking about what all these people are saying, folks, is because nobody knows, right? If you can accurately assess the probability of each of these people being correct, then you can assemble a profile of the possible ranges of scenarios that could occur and the possible probabilities that those will happen. And maybe you think there's a 100% chance that inflation doesn't go down. Well, that's, the one you side with. That's where you put your range of things. But Summers is making a lot of sense, man. And he's made a lot of sense for a while. And he's talking about going soft on inflation will plunge economies back into recessionary depths of the 70s and have adverse effect on working people everywhere. It reminds me of when Chairman Powell has made some of his statements, and if you've heard them, sometimes he'll come out even before he makes that planned statement, or maybe it was even the beginning of the planned statement, talking about, I understand that inflation is hurting the people who are hurting the most, right? It's taking money from the people that can least afford it the most, making those types of statements, right? Well, if he's legit, man, I think he's going to have at least this side of things in his mind, wondering, how could I risk stopping hikes right now when we have core with a 5 variable and headline CPI with a 6 handle, with core the 5 handle and 6, headline with a 6. So what they're talking about here is that there's the discussion of suggesting lifting inflation targets from 2% to 3% to avoid inflation. Now, listen, this all goes out the window if the economy completely collapses, right? The Fed will be forced, right? The market will decide the Fed's hand if things really get out of hand and a recession really accelerates, because the Fed has 2 mandates. They have full employment and stable prices. They don't have to worry about full employment right now. 190,000 yesterday for weekly jobless claims. They are solely worried about prices right now and price stability, which the chairman says continually is hurting the most the people who can least afford it. And he's right. Fixed income, right? People living on fixed income. Man, can you imagine if you had locked yourself into like an annuity? What if you locked yourself into an annuity at some crazy point at the beginning of the pandemic when, rates were at 0% and there was no inflation or something like that, right? These people are getting just punished unfairly, you could argue, okay? Now, to suppose that some kind of relenting on an inflation target will be a salvation, this is Summers, would be a costly error. It would ultimately have adverse effect as it did in a spectacular way during the 70s. Yeah, he's out in Davos, lots of Davos headlines, of course. Now, the reason why I bring it up is because Chairman Powell is repeatedly, some of those remarks, man, I remember quoting one in the Den saying they are not going to even think about cutting until they are sure it's back on its way to 2%. It might have even said pausing. So what Summers talks about in here, man, is if you just start making, adjustments, okay, it's going to be much more difficult to bring inflation from 4% to 2%. This isn't getting enough love right now when we just see a decrease from 6 to 5. Okay, my opinion. We will see if that comes with a recession or not. Firms do not hesitate anymore to increase their prices. That's different from 2 or 3 years ago. It's a signal that it's not that easy to bring inflation back to 2%. Would you argue against those comments? Because I think those comments make a lot of sense. I think still, right now, firms are able to raise their prices. Now, we talked about Procter & Gamble numbers, I think, yesterday on the show. Procter & Gamble numbers decreasing year over year, even with inflation. Not inflation adjusted, sales going down. So people are aware, but I would argue that tendency is still out there, and we haven't seen anything near 4% yet, let alone going from the battle from 4 to 3 and from 3 to 2. And right now, at least, the chairman is arguing that he wants it back to 2. Man, they asked him, hey, what about, I remember one of the press conferences, you're right, what's the possibility of, If it gets sticky, could you be comfortable with 2.5% or 3% being the number that you're comfortable with? And of course, okay, he didn't acknowledge that that was something they would do, because no Fed chair in this role would do that. But we're not even close to that point in terms of where he would have to be, I think, because what really is the risk right now, folks? I mean, Google's laying off 12,000 jobs, okay? But this is not what a demise looks like. And if we still have headline numbers that are in the 5 and 6 handles for inflation, to put things lightly, since 2017, this is back to Google, to put how lightly, even 6% of their workforce getting laid off, even that number is nothing compared to how many jobs they've added over the last 3 years, over the last 5 years. Since 2017, the company's more than doubled its workforce. So they went from 80,000 to 186,000. No, 90,000 to 186, something like that. And they just dropped down 6. So the other way to say it, take that 6 out of there, okay? And yeah, you just went from 90 to, you doubled your workforce still. They've more than doubled it since 2017. Now, you look at that percentages they had up in here. Yeah. Their headcount has swelled 20% per year since 2017. And all they're doing is trimming 6. Okay? So if the economy is that healthy, and these are all variables in play, man, but if the economy is that healthy, and that's pretty healthy, man, okay, that's not a job market that's in demise. That's a job market where you're barely trimming. I mean, what is that if you break it down? That's hiking jobs 20% every year since 2017, and if you're giving back 6%, that's basically saying, you know what, we have to pull back the last 3 months worth of hires. That's it. That's all it is. 3 months worth of hires, basically, because that would bring you to 24%. Okay, so it's 3 months, 4 months of hires, to put it in context. That's all it is. It's just nixing the last 3 or 4 months of hires that you've had. Now, I'm sure that it's going to be spanned beyond that, or maybe they haven't been hiring in the last 3 or 4 months. But keep that in mind, because the more I read statements like Mr. Summers, I think that if you are Chairman Powell, okay, you're okay with what's happening in the economy right now. This is the soft landing. But guess what? You got a long way to go, man, to get inflation to where you want it to be. And yes, you can make the case that maybe you go to 25, maybe you go another 25. But what's really going to start to get interesting is if the numbers align, where are we going to be in the second half of the year? And I keep bringing up that I think the May meeting is going to be early enough. We have this meeting at the end of March, and then I believe we get this meeting at the end of this month, January 31st and February 1st. And then we get a meeting somewhere around the middle of March, maybe March 14th and 15th potentially. And then we don't get a meeting until like May, early May. I'll pull up the schedule when we get back. We'll pull up another couple of these quotes from Mr. Summers to make you think about those Federal Reserve possibilities. And we'll take a look at some of the other companies. We're going to talk a little bit of crypto as well when we get back. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets still in the positive for the S&Ps and the NASDAQ. You get the Dow sneaking into the red with the Russell. Right now, S&Ps, they were just in the red just a moment ago, man. You see the volatility. We dropped like a rock on the opening bell by about 15 points. A little bit of a pop from there. These are 5-minute bars. So there's your 930, there's your 935. There's the bar that began 2 minutes ago at 940. You jump over to the NASDAQ 100. Excuse me. We got Google moving this morning in big ways. That helping things a bit. With the NASDAQ 100 up about 0.6%. Let's jump over to Google shares. There you go. Up 3.7% for Google. Microsoft's higher as well. Microsoft up 1.7% right now. Meta shares flat with some volatility. We jump over to Netflix. Whew, there you go, man. Well above the highs we had recently of, I think it was 336 was the high. We're up 7.9%, $25 to the upside for Netflix shares. And yeah, kind of just the Netflix story there. Even the streamers, Disney, not getting a boost as those are Netflix numbers. 7.7 million subscribers added. Quite a number. Recalibrating maybe their growth that's getting priced into that equity, which is why you're up 8% today. Okay, getting back to Larry Summers real quick. Just some of the quotes, man, because keep them in mind. I think they make a lot of sense. It would be a grave error for the central banks to revise their inflation target upwards at this point. And this is talking about if we get sticky, okay? This is saying, should we move it from 2 to 2.5, what happens, right? Having failed to attain the 2% target and having re-emphasized repeatedly the commitment to 2%, to then abandon that target would do very substantial damage to credibility. If you can adjust it once, you can adjust again. Now, that's always the case, okay? But I think that Chairman Powell understands exactly what he's talking about. If I was in Chairman Powell's role, I'd say, man, you know, what's going to happen if I ever move to that level? Inflation. And folks, 2%. Okay, versus 3%, it all matters, all right? It's, you know, having a son that's not even 2 years old yet, you think about a 3% inflationary environment versus a 2% inflationary environment. Let's just go to 3.3 because that's close enough. That means prices are going up 10% every 3 years instead of every 5 years. You start compounding those numbers, okay, and 3% is a much bigger number than 2%. And I don't think Chairman Powell wants to be the guy that's known for the fact that we came to accept inflation at 3% because of his errors going forward. So we'll leave that there. But keep that in mind as the talk goes on, especially as you get into later in the half of the year when you talk about cutting. And we're still weekly jobless claims at 190,000. Keep that in mind. Okay, they talk a little bit of rates, but guess what? We're not going there. We're going crypto, man. We're going crypto for billions of dollars. Pretty remarkable. The Genesis, okay. Yeah, they own the Winklevi. They own the Winklevoss twins. $766 million. Yeah, their Gemini earn. Folks, if it's too good to be true, it's too good to be true. Okay? I do feel for the people that got caught up in this, but to a certain degree. What was Gemini promising? 12%, 14%? It seems like 14% was like standard. Didn't even know that was happening. Thank goodness I didn't know it was happening in the crypto area. But something like that, guaranteeing only if they didn't go BK, right? They guaranteed it as a business. They could go BK. Therein lies the problem. It eclipses the $3.1 billion owed by FTX to its top creditors. Yeah. I mean, it's crazy. And this is when we have Bitcoin trading at actually prices above where we came into the collapse. Okay, so Genesis Chapter 11 filing yesterday. 7 creditors owed at least $100 million. By far the biggest one, the Winklevoss. Yeah, $766 million is what they're owed. They're probably not getting it back. Now, this stems from, I mean, it's just going to keep unraveling, man. I was trying to figure this out earlier this morning. I was going around. This stems from Three Arrows Capital, okay, to a certain degree, right, which stems from everything going on, of course. Okay, this article is talking about how the 3 Arrows Capital guys are already trying to start another company out there. But you have Genesis may have loaned 3 Arrows Capital like $2.4 billion or something like that. So now Genesis has got no money. They're going BK. Their 50 top creditors are owed $3.4 billion, of which is Gemini. Gemini is the earn company started by the Winklevoss, okay? These are breaking down the different companies. Yeah, it was some of the other articles I was reading this morning. But it seems like they're not getting their money back either. Anybody. Nobody's getting their money back in terms of where the billions end up, man. Yeah, they just list a bunch of the other companies. They're your top creditors out there. Now, some of them are not named. Some are redacted in the filing. But pretty remarkable that the top creditors for Genesis are owed more than that for FTX. Now, there's a lot of small creditors on FTX, which is probably why, in terms of numbers that go below those numbers, in terms of where you are, in terms of how many people probably had $100, $1,000, $10,000 even, right? Or larger numbers than that, but still don't even come close to being a top creditor for the company. Yeah, pretty crazy, man. I could spend the whole show talking about some of that stuff. All right, what else we got? Let's see. Let's talk a little bit of Saudi Arabia. So it's pretty interesting how much they are spending going after sports. And they were exploring a bid to buy F1 Motor Racing for $20 billion with a B, $20 billion. Now, F1 was just bought in 2017 by John Malone's Liberty Media, okay? $4.4 billion. Not a bad return over a 4 or 5 year period, but kudos to him, man. He's not selling. The tracking stock, okay, has a market value right now of about $15.2 billion. It's an extra $5 billion he just turned down. But guess what? He probably thinks that it's going to go up from there. The F1, they are creating quite an aura in terms of bringing that to the U.S. Where was it? It was in Miami, I think. Was it in Austin, potentially as well? A couple spots. But they mentioned in here that they do have, I think, 4 races next year are going to be hosted in the Middle East. And the Saudis, man, they're going after it. They don't want anybody to think about anything but their money and their sports. And they're willing to spend tens of billions of dollars to do it. But guess what? Liberty Media's guy, he's saying, no, we're not selling. We're going to stick our $15 billion valuation and see where we go from there. Yeah, what else we got? Where are we jumping? Excuse me while I jump around, folks. Okay. Okay, what else is moving today? Let's see. Well, we got Ralph Lauren gets an upgrade. Let's see how they're trading. Yeah, they get an upgrade. They're up 1.4%. They get an upgrade to overweight from neutral by JP Morgan. Excuse me. No, that wasn't it. Excuse me. Barclays upgraded Ralph Lauren to overweight. Let's see. Salesforce got a downgrade. Yeah, they claw that back to be even. Okay, here we go. Nordstrom. Look at that. So they announced that the holiday sales fell 3.5% year over year. In a statement, their CEO described the retail environment as highly promotional. The company also lowered its earnings outlook, and boy, they clawed back. That's an interesting one. Now, some of the other retail stocks may be reacting. Yeah, look at how they get it back, though. Quite an announcement from Nordstrom. And you have Macy's trading lower. You know what I'll say, man? I was in a Kohl's yesterday, last night. Time is crazy, man. Kohl's has some problems, I think, folks. And the chart is just saying it. We'll talk a little bit of Kohl's. We'll talk about some of the other companies. We'll talk some Costco when we come back as well. Stay tuned, folks. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps positive by 10 points right now, trading at 39.26. Jumping back to Kohl's real quick, I'll tell you. Kohl's, they do have decent clothing in there. They got a good Nike, Under Armour, Adidas. But here's my take on Kohl's. It's still relatively expensive. This is just straight out anecdotal experiences that I have there, okay? But sometimes you want to listen to it, man. And here's the problem that I find with Kohl's all the time. Is that you have items that are on hangers that say like large or medium or small, right? And the shirts don't match up. That's okay at like a very budget shop where you understand that you're saving money for maybe a little bit more disheveled arrangings or something like that, right? Walmart, for instance, people give Walmart grief, okay, in terms of, the store atmosphere at times for many reasons. But I started thinking about that, and it's like, that's not the experience, man, that you're paying for. And I've been leaving Kohl's, not buying stuff because it's so expensive that you're basically going shopping at a Macy's, I feel like. You're not getting the discount, and meanwhile, the experience isn't as great, and you got all that real estate to pay for. Nonetheless, Kohl's up from $23, but bumping into the recent highs areas of about the low 30s for Kohl's recently. And I'd mentioned Elon. So keep your eye out. He may be testifying today about that fraud trial. He might testify as soon as today over the infamous tweet, and investors say that tweet cost them big losses from stock price drop. And hey, if it wasn't material information, folks, that's how things go. Tesla, nonetheless, up 2.6% so far today because the S&P is up 10. Let's check back in on Netflix right now. Holding those gains, Netflix up a solid 8%. And that is all Netflix, man. Disney, barely positive, but positive with the market. You jump over to Google. Look at that run, up 4.6% right now. Microsoft up 1.7% right now. NASDAQ catching a bit as you're up 0.8% for the NASDAQ 100. Dow marginally in the red so far this morning. All right, folks, thanks so much for starting your Friday with me. Stay tuned. We got our man Basil Chapman coming up next. Of course, we got Larry Pesavento, Fast Market, Steve Rhodes, Dave White, Tom O'Brien this afternoon. Thanks for starting your Friday with me, folks. Have a great day. Have a great weekend. Have a safe weekend out there, folks, and we'll see you back here on Monday. Have a great one, folks.